Hi there, this is Casey, and you're looking at 28 different charts. And I want to do an experiment. And this experiment is going to show you and me how important money management is. And so, what we're going to do is on each of these charts, I'm going to take a random trade. And it's the Asian session. I'm just going to go through each one of these charts and take a random trade. Similar money management strategies. It's going to be a 2-to-1 risk to reward ratio, and I'm using my handy dandy Epic tool. A 2-to-1 risk to reward ratio. Each trade is going to have a 30 pip stop loss, and it's going to be a 60 pip take profit. And so we're gonna run that, and we're gonna see what happens. It also is going to have a trailing stop in place. So once it moves in position, we're going to go ahead and take the trade. So normally I like to wait for entries and be patient and all that good stuff. But in this case, we're just gonna go ahead and do it randomly. So let me go ahead and just do my thing here. Okay, so I just went ahead and took all the positions. A couple of them was getting some error messages, so they didn't all trigger, but we'll calculate everything. It'll be still a really good experiment, and I'll come back here. It might take a couple days for the results to process because we have all these open trades. We'll be able to open them. You can see all of the trades are open right now. And we're going to see what happens here with the account. We have all of the positions open, and we're going to track everything, and we're going to report back and show you exactly what happens and really learn what the benefit of good money management is. All right, we'll check in a minute. All right, guys, I'm back. I just came back in after a day. I haven't touched this computer or trading platform, and remember, for you guys, it's been instantaneous, but for me, it's been about 12 hours or so. And I was using my Epic money management tool, just sharing why money management was so important. If you want to grab the tool, it's in the links in the description. But let's go ahead and take a look now, okay, and see what we got. So I'm just going to pull up a random trade here and see. Okay, so this trade was actually, it was open, and I can't remember what I did, if I went long or short, but either way, it's closed now. So let's go ahead and open up the terminal. All right, so you can see here, my current equity is up $1,500, and my balance is $9,574. And I honestly don't remember if I showed you guys what the balance was earlier, but it was about $9,800 when I did this last night. So it was $9,800. So I've actually lost some money, right? However, let's take a look here. I've lost some money, but I'm up $1,500 in trades. I believe I just closed a nice Euro-Yen trade right here at $878. And you can see a lot of closed for profit, but a lot of closed for losers. So I'm down $366. But I had actually taken a couple practice trades before that, so it's not totally on point. But anyways, the point is we're up 1,400. So let's go ahead now and just look at some of the trades and see what we've got. Aussie yen is the worst one, and you can see right here it's getting ready to go down. And that's it's actually getting ready to go up. I mean, it's going up, so that's probably going to be a loser. Let's take a look at the next one, Aussie CAD. Aussie CAD is moving up also, so Australian's getting stronger. Aussie Swiss is moving up as well, and I was short on all of the Australians, so that's part of the deal. Aussie New Zealand is doing really well, and New Zealand yen. So I could, if I wanted, I could just close all these up, and 1,500 is up like a 20% gain. Right, I'd close this out at about 20% profit on the day. My equity, you know, if I started at 95, well, let's just say I was at 10, my equity gets to 11,000. That's a 10% in one day. And remember, this was not any particular amazing trading. This was just totally random on 25 trades. So if I can do this on 25 random trades, then that's pretty solid performance. Now, what I would like to ask everybody here is if you want to see me do it again, because I'm thinking about doing it again tomorrow and posting it in another video. And just see what happens if we do this on a daily basis using good money management skills. Was this just a fluke? I mean, I did take 25 trades at one time, or 28 trades, or whatever it was. Was it a fluke, or was it something different? Was it just the fact that I used good money management? So let's take a look at the actual report. So I'm going to close this up just because I want to do some analyzing here. So I'm going to close all these, and yes, I could probably do better if I let some of the trades run, make a little more profit. But the point is, I just closed out of my profit. So today, my profit was $1,000, right? $949, roughly 10%. So the thing about this is we can save this as a report, okay? And we're going to save it as a report. And now we're going to analyze our stats here. We're going to analyze our stats. So here's what we've learned, okay? Here's what we've learned. Number one is the winning percentage was 48%, okay? You can see we had a little bit of a drawdown, but that's because the winning trades were closed, or the losing trades were closing, and you'll get drawdowns. The losing trades were closing while the winning trades were still being open, okay? So it was a pretty heavy drawdown. And you can see it was a total of 32 different trades. 32 trades. Now, some of those were practice trades, so my numbers would actually be a little bit better. But you can see the winning percentage was 48%, right? 48%. Now, here's where it really gets interesting, and that is that the average winning trade was $307, and the average losing trade was $229. And so that's really where this happens. The biggest loser was 450, but the magic happens with the average win being bigger than the average loss. And if you can do that and keep your winning rate around the same position, you're going to do really well. And you'll notice our total, oh wait, this is total was 31, and I won 15 and lost 16. So right around 50, so I lost 51% and I won 48. Okay, so that was it. That's the big takeaway. So let me keep going and do a little more analyzing. Let's take a look at some of the trades. Let's look at this pound dollar trade. This was a loser, okay? And so if you can see, this one was, I lost this right away, and it doesn't even look to make a ton of sense. I think it was because the stop loss, because I used a trailing stop maybe. Well, might have, I don't know why this was a loser. The stop loss was here, but why did it lose? It would have lost anyways. But you'll see I put a 50 pip stop, so it would have been a loser, so it's okay that it was only a small loser. Not sure why that happened. Again, that's what happens when you're trading and you're not watching the charts. Let's look at USD Swiss. Okay, USD Swiss was a loser, and where is it? It should be on the chart. Where is it? I bought it right around here, and I don't see, usually there's an image here on the chart that shows the loss, and I don't see where that is. Okay, so that didn't teach me anything. Let's go ahead and look at the US yen. US yen. Okay, there's US yen. Exactly the same situation. It lost right away. Looks like there was some kind of spike. This was a short, and technically this trade should have probably won, because it went down 28 pips and I have a trailing stop. So this is one of the reasons why we would watch our trades. So one lesson is I've got two losers that I have no idea why they lost. Might have been spikes or something else, but had I been watching them, I would at least be able to know. So right there, my winning percentage on this should have been a winner. Like, I can't understand at all why this was a loser. Because according to my settings on my Epic tool, I have a trailing pip stop that triggers. Let's look at the exact settings, make sure I have it properly set. but I have a trailing stop that triggers, trailing stop at 150 pips is when it starts, or points. And so that's 1.5 pips. So it starts to trail. Maybe that was the problem, is my stop loss was too tight. Because that's 1.5. 150 points is 15 pips. Okay, so that's actually not bad. 15 pips, I believe. Let's just double check. So we roll this down. Let's go to 150 points. There's 150 points right there. 150 points is about 15 pips. So at this point is when my stop loss should have tightened up, right? So at that point, it should have been fine. So I'm not sure what happened. I got to watch it. Watch my tool, make sure it's working properly. And so there we have it. Let's look at, and I have two USD Swish trades, a buy and a sell. Okay, here's the sell, same thing. So there's a lot of things going on here that I don't quite get. Why did I get out? This should have been a winner. Okay, this should have been a winner. Because at 150 points, it locks. It starts to trail. At this point, I'm trailing. It ended up going 35 pips in my direction. Would have been a winner. So not sure what's happening. And maybe these are some older ones. Yeah. But, okay. So anyhow, it was a big winner, a big day. Let's keep doing these demonstrations. The main point is, the main takeaway is I want you to be able to understand how important money management is. Money management is absolutely critical when trading, and we've got to manage our trades well and manage our risk. If you do that and you give your trade a chance to run to hit the profit, you can see my biggest winner here is 878. My biggest loser is 450, and that really is the difference in this whole thing. That's why, as I have the big winner and smaller losers, that's what makes this thing really work. So again, hopefully that was a big lesson for you guys. Hopefully you enjoyed a lot. Just let me know, and we'll take it from here. See you next time.